Good morning, everyone. I hope that all is well. I just want to take this opportunity to go through what we call CVP. CVP stands for cost, volume, profit. There's a correlation between the costs, volume, which is the same as units, and the profit. So specifically, break-even point. So I'm just going to touch on the break-even point, but unfortunately, I cannot talk about the break-even point without touching on the cost, volume, and the profit. Firstly, I want to highlight the fact that when we talk about the break-even point, this is a point whereby the total incomes are the same total costs, as you can see here on the formula here. So here it means we are not making any loss, we are not making any profit. For any business to survive, they will make sure that they reach this level, this break-even point, as soon as possible, because they know the minute they reach this point, they will be able to start making profit. Yes, we know that profits are not guaranteed. Losses are there, which sometimes are not avoidable. But our main aim is to increase our incomes in order for us to make what? Profit. But as I said, in a nutshell, the break-even point is a point whereby the total incomes of the business are the same as the total costs. Now, for us to be able to deal with the break-even point, we need to understand some variables which will form part of the calculation or of the formula which is going to be used in order to calculate the break-even point. First, we need to know that we need sales. Remember, for you to be successful in business, you need to be able to increase sales. That's why we've got sales people who are going to promote our products. We've got the marketing team which is going to make sure that our products are promoted so that we can increase our sales. Because the more sales we have, the more profit we are going to have. Again, we need to understand what we call the variable costs. So what are the variable costs? The variable costs are those costs which change due to the change in units. For example, let's say, for example, we sell 5 units. So the more you sell is the more variable cost you are going to have. For example, once again, let's say 1 unit costs me how much to sell? Cost me 5 cents to sell. So if I sell 2, it's going to cost me 10. If I sell 3, it's going to cost me 15. If I sell 4, it's going to cost me 20. So those are variable costs. It means the more I sell, the more the variable cost I'm going to incur. It means if I don't sell anything, I won't have any variable cost. So the variable costs are dependent on what? On the sales which we made. So if my sales are 0, the variable cost will be 0. But if I sell a certain unit from 1, it means again the variable cost will increase from 0 to a certain cost. That you understand logic. Again, for more information, guys, make sure that you go and check your material because more will be explained in your material. Here, I'm just trying to summarize this for you. So if you take those sales and you minus variable cost, we always get what we call the contribution margin. So the contribution margin can also be called contribution profit. So this profit contributes towards the fixed costs. So it's going to make sense by the time when I introduce the fixed cost to you. Again, you can also call them marginal profit. Okay. Now let's take it further. When you take your contribution margin or contribution profit and you deduct or you less your fixed costs, we always get what? Net profit. Remember, sometimes you can get net loss, but here I'm just saying at least we can be able to cover our fixed costs. So when you less, you always get what? Net profit or sometimes net loss. So I think it can be easy if I can be able to present whatever I'm talking about here according to what? To the table. As you can see here, The fixed costs do not change due to the units change. In other words, it's not like the variable cost. So if you sell more units, the fixed cost will remain constant, depending on whether you are still within the range. Because obviously, think about renting a space. So you normally pay, let's say, for example, 5,000 per month because you are using the same apartment for a particular period. Can you see now? But if, let's say, for example, you cannot fit your things in that venue anymore, you will need more space, is then that your fixed cost will change. Sometimes we call them step costs. But here we're just assuming that we are within that range. It means our fixed cost will remain constant irrespective of the units we sold. So you need to know the difference between the two. Remember here, I'm talking about the total sales, total variable cost, total fixed cost. I'm not talking about cost per unit. I'm talking about the total cost. Now, let's try to present this in the form of a table. Let's say, for example, we've got the sales. We made sales amount of how much? This is amounts are in rands. We made sales of 200,000 rands, and then we had variable costs of how much? Of 40,000. Can you see if you say sales less variable cost, you get contribution margin of how much? Of 160. Can you see now? This means that this contribution margin or profit will cover our fixed costs. Now, let's say we have got fixed cost of how much? Of 100,000. Can you see, for the mere fact that I made contribution profit of 160, at least I can be able to cover the fixed cost of how much? 100. So I covered the fixed cost of 100,000. So now I remain with how much? A net profit of 60,000. It's very much important to know the relationship between the contribution margin and the fixed cost. This means that we use contribution profit or margin to cover our fixed costs. So we covered at least 100,000 out of 160 of the profit that we made. So our overall profit is how much? Is 60,000. This doesn't mean that we always make a profit. So sometimes we make a loss. Let me show you that with the same information, but if I change my fixed cost now to 180,000, can you see now with the profit that I made of 160, I only covered 160 of 180. Is then that I will make a loss of how much? Of 20,000. Can you see the importance of contribution margin? Sometimes you call it marginal profit. It is used to cover a fixed cost of how much? Of 180. Now, this can help us if, for example, we want to check whether we have to discontinue a business or we have to continue operating the business. For example, if I discontinue my business at the moment, it means I won't have sales anymore. The minute I say I'm not going to have sales anymore, it means I'm not going to have contribution margin anymore. And remember, in most cases, our fixed costs are committed. Our fixed costs can be contractual. It means that even if I can stop the business completely, I still have to pay a monthly fixed cost of 180,000. Can you see now? So if I stop this business completely, it means I must worry about paying 180,000 per month, because this cost, irrespective of whether I'm running the business or not, this cost will remain payable. So we need to be careful before we stop the business, because if I stop it completely, it means I'm going to make an overall loss of 180,000. But if I continue the business, even though I make an overall loss of 20,000, can you see at least I'm making 160, which will cover 180. I must only worry about a loss of how much? Of 20,000. So you need to be careful when it comes to that. Now, with this information, we can be able to calculate what we call the break-even units. What are the break-even units? The break-even units are the units which I have to sell in order for me to break even, not the units that I have to sell to make a profit. So I just want to know, okay, I don't want to make a profit now. I don't want to make a loss. How many units must I sell for me to break even? There is a formula that we need to use. The formula says we need to use fixed costs, meaning I'm referring to the total fixed cost. There must be total fixed cost for the business. So I will take those fixed costs and I will divide them by what? By a contribution margin per unit. Can you see now? Be careful here. I per unit. We need to understand that very carefully. So it means I must make sure that the contribution margin that I have is not the total one, is the per unit one. So this formula is going to be used to determine how many units must I sell in order for me to break even. Remember, the break even is a point where I don't make loss and at the same time I'm not making any profit. So we must also understand how to find the contribution margin per unit. Remember, the formula says contribution margin per unit. So how can I find the contribution margin per unit? I need to take my selling price per unit and I need to minus variable cost per unit. Can you see now? Per unit, per unit, per unit. So it means I must also know this formula, because if I don't know how to calculate this, how will I know the amount that I'm going to use here in order for me to calculate the break-even unit? I'm just going to use the same information that I'm used previously so that I can be able to explain. Okay. This is the information that I used earlier on. Remember, this is the information that I used earlier on. But the problem with this information is that these are the total amount. These are not per unit. So it means I cannot be able to calculate the break-even units, because my break-even unit formula says I must take the fixed cost, of which is this one, because it must be the total, but I must divide by the contribution margin per unit, of which I don't have on this. So I must be able to convert these figures to be per unit. Very easy to convert. Let's say, for example, for me to make this profit of 60,000, I sold units of how much? Of 1,000 units. So as long as I know my units which I sold, I can easily convert these units to be per unit. For example, I can convert sales to become selling price per unit. I can convert variable cost to be variable cost per unit. What I'm going to do, I'm going to take the total sales and I will divide by what? Can you see? I took sales of 200,000 and I divided by 1,000 units and I got 200 per unit. Can you see? Already I have got this one. The same applies to variable cost. I'm going to take the variable cost of 40,000 and I'll divide by 1,000 units and I got 40 rands per unit. Can you see now? So it is important for you to know how to convert the total amount into per unit amount. Just take that total that is given to you and divide by the units. Sometimes in the exam you can be lucky enough whereby they give you per unit amount, so it's going to be easier for you. But here, remember, these are the totals. I must know how to convert them to per unit. After converting them to per unit, it means I can be able to calculate the contribution margin per unit, because I must just take the selling price per unit and I must minus what? Variable cost per unit. As you can see here, so contribution margin per unit, I took my 200 and I deducted my 40 and I got my 160 per unit. This 160 per unit is called contribution margin per unit, of which I'm going to use by the time when I calculate the break-even unit. Can you see now I'm ready to go and calculate my break-even unit, because already I know my contribution per unit. Therefore, I know my fixed cost per unit, which are how much? This must not be per unit, it must be total cost of 100,000. I know my contribution because I just calculated now. Can you see now? So therefore, my break even, as you can see here at the bottom, I will take my 100,000, which is this one here, 100,000, and I divide by the contribution margin per unit, which is this one that I calculated here, which is 160, meaning for me to break even, I need to sell 625 units for me to be able to break even. Can you see now? But for me to make a profit of 60,000, I need to sell 1,000 units. Can you see what is the difference here? So here, this 625 is only for me just to break even, not to make profit at all. But if I want to make profit, I need to sell 1,000 units. I hope this one makes sense, guys. Please go there, make sure that you go through the process, trust the process. I'm telling you, you will understand better. Thank you so much, ladies and gentlemen, and I hope you understood this short video, and all the best. Thank you very much.